Welcome to Fundraising today. I've got Meka Asonye here from First Round, close friend, amazing investor, and we'll kick off with you introducing yourself to the audience.
Hi, everyone. My name is Meka Asonye. I'm a partner at First Round Capital. We are an institutional seed stage VC. We've been in business for about 20 years, back names like Uber and Square and Roblox, and I focus mostly on B2B SaaS and fintech after a 4-year career at Stripe leading sales and then at Mixpanel leading global sales.
Amazing. All right, so we'll start with just some general stuff. How would you describe the fundraising environment right now? The whole purpose of this series is like a month by month kind of like hot take, check-in, temperature check. So what's going on in the month of July?
Yeah, I mean, I think it's like glass half full, glass half empty, depending on how you think about it. I mean, there's a lot of capital that needs to be deployed, but I think the fundraising bar is just higher than it was 12 and 18 months ago when a lot of companies may have raised their pre-seed or seed. So it might feel like the ground is shifting under them. Valuations have come down a bit. I think the timing and how quickly rounds come together have come down. And we're seeing like, I'd say the run-of-the-mill average high-quality seed round getting done at like somewhere between 15 and 25 posts. I think on the glass half full side, like the markets are open for good companies with a unique insight and a painkiller solution. Like, you know, I've seen companies that have 5, 6, and 7 term sheets, which feels a little bit like a throwback to 2021. Yeah. So I always like to tell founders that like the market, people are always like, how's the market? How's the market? Is this a good time to raise? And I tell them the only market that matters is the market for your equity. Like, you will set the bar for what kind of reception that you get.
Yep. Yeah. It feels a little bit different. It's so funny doing this month to month because even from like May to July, I'm starting to feel like a little bit more of that. All right, we're getting into the second half of the year. Like funds are starting to be like, all right, we got to start like hunting down a little bit more. And so it does feel like it's getting a little more active. Are you feeling the summer slowdown at all? Or do we think that schedule's changed a little bit this year?
Yeah, I mean, I think around the 4th of July, there's always a bit of a slowdown. I don't know if it's driven by the founder side and family vacations or if it's driven by the VC side, but I think there was a short sort of week or 2 week blip where things were slower. But, you know, as we sit here recording today, things are busy as ever. I've got, 6 or 7 first pitches today that I'm really excited about. Yeah, it's always a fun time in early stage ventures. So the market is very much open, and First Round is doing business.
Amazing. Good to hear. All right. So given that the market is open, what kind of deals are you seeing the most and the least momentum around? Like, what are people really excited about? What's a lot harder to get over the line? Like, any outliers there? Is it kind of your typical stuff?
Yeah. So the funny thing is I'd say actually the categories that I spend the most of my time in are actually have the least momentum. Like fintech and down the middle fairway SaaS is actually pretty quiet. I think the other thing is that like the age of the point solution where there's like lots of tiny SaaS tools to do every single thing in the business. Like I think that's gone and people are moving more towards suites of products. Sure. The other thing that I would say too is that like, for a long time, someone would say, hey, in 6 years, I'm going to build this amazing thing. And they'd have 0 proof points today. And so those unproven stories, I think there's not a lot of momentum, but if someone has little signs of early traction, signs of customer pull, they've done the work, I think those things, have a little bit better momentum. Another really tough category is just like capitally intensive businesses. And I think what's happened is people are now worried about downstream funding risk. For a long time, there was really like, you knew if you funded something today, someone else would fund it, 18 months from now. And I think sort of the whole market's gotten a little bit wiser and sort of those capital intensive businesses with downstream funding risk. What it really is it all stems back from the public markets. And I think there are businesses with known valuation frameworks, like a SaaS business. You can argue whether or not you're going to get 5x ARR or 10x ARR, but you sort of know the equation. But when you think about some tech-enabled services business, like tech-enabled healthcare, like no one exactly knows whether or not that's sort of valued like a healthcare business or a tech business. And so I think those kinds of businesses have not a lot of momentum. Yeah. On the flip side, I would say AI, anything like with AI in it is there's a lot of momentum. Yeah. I think there's a lot of things that haven't changed, like businesses with strong founder market fit and founders who have a really deep understanding of the space, second and third time founders, deals with a lot of traction with their sort of proven customer love. And then businesses where they've de-risked something since the last round. I think those sorts of things have had a lot of momentum and heat.
Cool. Are you adjusting your own strategy at all, given the slower fintech space right now, or are you sticking to your guns?
No, my take is that like I want to back founders who found companies that are deeply personal to them, or there's a real problem that they've been looking at for a long time. And regardless of sort of like the macro perspective on the space, those founders who are really customer driven and problem oriented, I don't think they ebb and flow. Like the standard MBA grad who's like, I just want to start a business and I'm going to see what's hot. Like that's never really been for me. And so I'm still spending a lot of my time in SaaS and fintech. You know, at first round we're generalist fund. So every once in a while we do some wacky stuff. I led an aerospace deal last year that I'm super excited about. And, you know, we'll look at some marketplace businesses. And so you always have to keep your head on a swivel because you never really know who's going to come out of the woodwork with an amazing idea and what could be $1 billion business in the future.
Yeah, totally. All right, last one. What advice would you give for a founder that's like about to kick off anything from sort of a pre-seed to a seed to an A right now, or they've kicked it off and they're kind of in the process? Doesn't have to be your holistic advice, but like one or two little nuggets that you can give them.
Yeah, I'd say one, prepare for the process to take a few months instead of a few weeks. You know, we still meet founders who are like, first meeting today, they're like, I'd love to have this process wrapped up by the end of the week, and I'm like, oof.
You're like, me too, man.
Yeah, you haven't gotten the memo. You know, I think the second thing is make sure you just clearly communicate that the product addresses a hair on fire problem. I think in today's market, there's so much SaaS spend. People are looking to rationalize spend. And so I think that if you're not plugging into an existing budget line item or something that is a new, unique hair on fire problem, you're really going to struggle to get through procurement and the finance team. And then my other advice is just be reasonable with your expectations. So for somebody who's raised a pre-seed in 2021, your valuation is probably north of where the market has come. And so the normal, I'm looking for a 2 to 3x step up for my previous round just doesn't apply. You have to realize that 2021 valuation has to be discounted. And so I would think of success as just getting more capital to continue to chase your dreams. And, you know, if it's a flat round, if it's a down round, or if it's a slight bump, like I think the bar should be, can I raise capital? Because there are a lot of businesses who actually can't raise capital. And, you know, for me, that's what I think of as success for fundraising in today's environment.
That's really good advice. One last question that I'm just curious about, what's the like vibe around bridge or down rounds right now? Like, I feel like we all had one opinion for a while about it. It was this big flag and like whatever, but now it actually has pendulumed over to like, that's probably the responsible thing for like a founder that's really in it for the long haul to do. Like, what's the feeling? What's the word on the street right now about it?
Yeah. I mean, I think the feeling is good if the founders come in with realistic expectations. There's nothing that's more off-putting than someone who raised 5 or 6 million at the peak, and then they're here today, not having de-risked much, asking to raise $5 or $6 million again. And so, you know, my question in my head is always, is this a bridge to somewhere? Is this a bridge to nowhere? And so the thing that I'm trying to figure out in a meeting is, why is this extra $1.5 or $2 million going to be an inflection point in the business? And if they don't have a clear rationale for, we discovered X 3 months ago, or we just shipped Y, or we're about to ship Z, you know, I think it's really tough to take part in that round. But I think trying to throw everything out and say, oh, it's a bridge, or, you know, it's an extension, I think that's an invitation to miss some really special companies right now.
Yeah, I love that. The bridge to somewhere, bridge to nowhere, I feel like is the best description I've heard of how to consider a bridge. It makes a lot of sense. All right, cool. Super helpful, quick, easy, dirty. We got it. What am I? I'm happy that you're here, and I'm glad that we were able to do this. Thanks so much for doing this with us. And I'll invite any founders. How do you like to get reached out to if a founder is watching this and they're like, I got the perfect thing for Meka? Like, how are we a DM crew?
Yeah, it's just straight to my email inbox, meka@firstround.com. I'm pretty easy to find.
All right, cool. We'll keep them out of your DMs then. Cool. Thanks again, Meka, and we'll see you soon.
Thanks for having me.